Welcome to episode 22 in my monthly series where I present to you my top 3 dividend stock picks of the month that are designed for income, and I'll also give you a high level update on the stock market in the last month. So first things first, as you can notice, my hair is screwed up, the lighting is bad, and also my voice is bad. So I'm not in my usual place. I'm in Panama right now, so that's why I don't have my usual equipment. So I apologize for that. I also have a bad voice because I actually caught a cold. Believe it or not, it's not COVID. Don't worry. It's just from going in and out, hot, cold, hot, cold. I guess I caught a cold like that way with the AC or something. So if you're new to the channel, welcome guys. This channel focuses on a long-term buy and hold income focused or income oriented investment strategy, and the main objective is really to generate relatively safe, consistent passive income forever. We achieve that goal by investing in funds that primarily hold blue chip stocks and that use income enhancing strategies like leverage or covered calls in order to achieve that high income. So the strategy enabled my wife and I to become financially independent in our mid-30s back in December 2019, and we're also retired because of that. So this channel is simply to show you how we invest for maximum passive income so you too could achieve financial independence as quickly as possible. Also note, I'm Canadian, guys, so most of the stocks and funds I talk about on this channel are listed on the Canadian stock market, on the Toronto Stock Exchange. But since we only invest in US listed funds now in our RRSP accounts, in our retirement accounts, 1 out of the 3 stock picks will be a US listed stock pick, an American stock pick. So stay with me if you're American. The first one will be for you, and the second one today might actually be very interesting for you as well. So keep in mind that if you like the first one as Canadians, I would put that in an RRSP because there's no 15% withholding tax there on US listed funds. Also, don't forget to check out my previous monthly stock pick videos if you're new to the channel or you missed them, because many of those picks are still valid and great picks today. I actually have a specific YouTube playlist for all my stock picks of the month, episode 1 to 22. So it's very easy to find them. You click on the name of my channel in YouTube, then click on playlists, and you'll see all my playlists. I took the time to make a bunch of playlists for you guys where I group related videos together, including my portfolio unveil videos where I show you my portfolio from A to Z. Those are my most popular videos by far, and also some videos on my investing strategy and philosophy, etc., etc. So make sure to check those out. So in terms of the stock market summary, this is the market that we're in. I like to call a flat market. I say relatively, or a relatively flat market. I say relatively because both the Canadian and American stock markets have gone up a little bit in the last month, maybe 2 or 3%. I saw the S&P 500 reach a new record, so that's great. It's all good. Looks like investors don't really care that much about the Omicron variant that much. Excuse me. Of course, in Quebec, they're completely locking down again, so I can't tell you how happy I am not to be there right now. No sectors really stood out to me this month per se, but the biggest news that I really have for you guys and to report this month, and that I'm super excited about, is that income-oriented investors like us finally have a good way to invest in crypto. So we'll see that in the pick selection shortly. You don't want to miss it. Now, you might be asking, crypto, why would you be investing in that? It's volatile. It's not safe. Well, yes, it is volatile, but I wouldn't call it unsafe, guys. I just see it as another asset class to add in order to diversify your portfolio, right? By now, you should know me that I'm not against anything, in terms of investing, as long as it provides me with a consistent source of passive income. So the 4 criteria for my stock pick, guys, as usual, I own the stock or fund myself or plan on owning it in the near future. Number 2, the fund must provide, of course, a consistent source of passive income, so a dividend or a distribution or a combination. Number 3, the dividend or distribution must be relatively safe and sustainable. In other words, the fund should be designed to provide income even if the stock price fluctuates. Covered calls really helps in that regard. This is why I always say the covered call strategy is the bread and butter of my investing strategy. And number 4, the fund must have great value right now. So without further ado, let's check out my stock picks for January 2022. All right, ladies and gentlemen. So the first pick, my US listed stock pick, is the River North Opportunities Fund. Stock symbol is RIV or RIV. I absolutely love this fund. It's one of my favorite US listed funds, and it makes a big chunk out of my RRSP. So the fund manager is River North. Dividend payout is monthly. Annual dividend is $2.04 a share, but it's about to be reset for 2022. So I'll go into that a little bit later. The 1-year high stock price is $18.75, which would give you 10.88% yield, but right now December 30th stock price is $15.80, so that would give you 12.91% yield. Awesome yield. So RIV is a leveraged closed-end fund, guys, that opportunistically invests in other closed-end funds. It is very diversified. It has equity, which is stocks, and fixed income as well, which is bonds. And it targets a yield of 12.5% on the NAV, which is reset annually based on the average of the last 5 trading days of the year. So it sounds complicated, but it's really not. So basically what these guys do is they reset the dividend every year. So they take the average NAV price of the last 5 trading days of the year. So basically this week, and then they apply 12.5% to it. That's basically it. So whatever that number is, that's the new annual dividend for 2022. So this graph shows you, I know it's a little bit small, what RIV holds. So it has fixed income, you could see here. It has equity. So a nice chunk in fixed income. It has a nice chunk in SPACs as well, special purpose acquisition companies, which is very hard to get in the Canadian stock market. That pretty much doesn't exist there, which is really, really good for us Canadians to diversify. Excuse me. So here you have the investment vehicle allocation. So most of it is closed-end funds. So it's a fund that holds other closed-end funds. Then you have some SPACs, the second biggest position, and a little bit, just a tiny bit in other stuff as well, like corporate bonds. So why is it a key points in reasoning? Why is this a stock pick? Well, it's currently trading at a small discount to the NAV, a 2.71% discount, which is pretty good. So basically, if it's trading at a discount to NAV, it means the stock price is actually 2.71% lower than the net asset value of which is what it's worth. So you're getting a great deal here. It has a high yield target. It always targets 12.5% of the NAV per year. It's about to be reset for 2022, and the dividend looks like it will be very similar to the current dividend, maybe slightly lower. We'll just have to wait and see for the announcement, which will probably come in the next couple of weeks. Curb your expectations for this fund, guys. This fund is primarily designed for income, all right, not growth. It has a good chunk in fixed income, which has suffered lately. Hence, the fund has suffered a little bit lately, presenting a good opportunity. That shouldn't scare you off. It should actually get you excited. It's very diversified. Like we saw, it has hard-to-reach asset classes, which is great for Canadians. Asset classes like fixed income and SPACs. It has really good returns. It has a good history. So it has over 10% returns every year since its inception. And what I really love, it's its unique strategy. It's a fund that invests in other closed-end funds that are trading at discounts. So that's why I say they opportunistically, or if you go on their website, it says we opportunistically invest in other funds. So they hunt down funds trading at discounts to NAV. And this guy is actually trading at a discount to NAV. So that's basically it. I strongly suggest, if you're interested to learn more about this fund, check out my video. I made a video not long ago, a month ago, on RIV and OPP. So OPP is a cousin fund of RIV. So make sure to check it out for details. And pick number 2, and this is what I'm really excited about this month, is the Purpose Bitcoin and Ether Yield ETF. So the stock symbol is BCTY for the Bitcoin one, ETHY for the Ether one. So these ETFs are managed by Purpose Investments. Their dividend payouts are going to be monthly. The annual dividend, although they only just came out with only the first dividend. So right now it's $1.20 for the Bitcoin one, $1.68 for the Ether one. But that's why I have 2 stars there. It could change every month. So this is just based on the first dividend. So the 1-year high stock price, not really interesting because it just came out. It's 10.04 for the Bitcoin one, 9.66 for the Ether one. So that's the stock price they started at, which would give you 11.95% yield for Bitcoin, 17.39% yield for Ether. No, it's not a joke. It's really, really crazy yield. And this is why I'm so excited about them. But the December 30th price, because Ether and Bitcoin just took a little dip, the price is lower. So it's 8.28 for Bitcoin, 8.19 for Ether, which would give you check out these yields, guys. 14.49 for the Bitcoin, 20.51 for the Ether. Absolutely incredible. So what are these ETFs exactly? What do they do? Well, these brand new ETFs really present the first opportunity to invest in crypto for an income investor like us. What they do is they write covered calls on their Bitcoin and Ether ETF. So Purpose Investments has two ETFs that just hold Bitcoin and just hold Ether. So that's BTCC and ETHH. So what they do is they write covered calls on their own funds, basically, out of the money. I'll show you that in a second, to generate those big premiums. So it's the first of its kind. It's very high yield potential, obviously, because of the volatility of crypto. Don't forget that volatility is great for covered call strategies, because the more volatile something is, the higher the premiums are. So very, very exciting here. Management fee is a little bit high at 1.1, but I say it's worth every penny from what the yield you're getting and just the uniqueness. So there's actually three ETF types, or three listings for each. There's, for the Bitcoin one, there's BTCY. So this is the currency hedged version. There's BTCY.B. It's not currency hedged. And they also have BTCY.U, which is in American currency. So if you're American and you're watching this and you're interested in these ETFs, you can invest in BTCY.U or ETHY.U. And even though they're listed on the Canadian market, they're in US dollars. So you'll get the income in US dollars. Very convenient. So keep in mind they have three listings each, guys. It's up to you to really decide, if you, as Canadians, if you want the currency hedged one or the non-hedged one. If I had the option, I would always choose the currency hedged one. Key points and reasoning, guys. Finally, we have a way to get income with crypto, right? Crazy high yield potential due to the volatility of crypto. Volatility is good for covered calls. High monthly distributions based on the first one. I don't really know what they're going to be going forward, but you know how covered call, think of this one like a QYLD or RYLD. Every month it could be different based on volatility. So we don't really know, but the first one certainly did not disappoint. And if you didn't know this, Bitcoin and Ether are really the two biggest and most well-known cryptocurrencies out there so far. So they're the most solid. There's no Dogecoin or any of those fake meme coins in here, or fake cryptos. You have the choice of hedged, non-hedged, or even a USD currency version one, like we saw earlier. So if you take the hedged one, it just means that it will mitigate any Canadian dollar versus US dollar fluctuation. So that's really all it means. So if you want to mitigate that, get the hedged one. If you don't care about that, get the non-hedged one. It's completely up to you, but it's really not wrong either way. Crypto can act as a hedge against the overall stock market and further diversifies a portfolio, just like gold. So think of it like another asset class, guys. That's how I think of crypto. And the cover calls that they write, by the way, I saw this on their website. If you click on the FAQ, you will see it. They're all out of the money, which means that you can get and will get capital appreciation if Bitcoin or Ether rises. So, and of course, that I mentioned the crazy yield potential. So yes, very, very excited about this one. All right, pick number 3 is ENS. It's the eSplit Corporation. This is a Canadian pick. The fund manager is Middlefield. The dividend is monthly, and the annual dividend is $1.56 a share. So the 1-year high price, $16.19, which would give you a yield of $9.65. But right now it's at $14.05 approximately as of December 30th, which would give you a yield of a little over 11%. So 11%, that always gets me excited. Anything over 10 is phenomenal if you ask me. So what is ENS? ENS is basically a split fund that only invests in one company, Enbridge. So it invests in Enbridge on a leveraged basis, and it also writes covered calls to enhance the monthly income. So the current NAV, so the net asset value of, or what this fund is worth, is actually a little bit lower than the stock price at 13.33. So it is trading at a 5.4% premium, but it's a very small premium. So for me, it's very acceptable. And keep in mind that this fund usually always trades at a premium and at a much bigger premium. Management fee is 0.75% for this one, very reasonable. So I just wanted to show you guys the graph of Enbridge versus ENS. So as you could see, the graphs look very similar, extremely similar. And this makes complete sense. Keep in mind that ENS does whatever Enbridge does, guys. It's really not rocket science. It's the easiest split fund to understand because it only has one fund. So if you if you're in my Facebook group, there's been a lot of controversy, a lot of questions about ENS. Why is it going down? Why is it not doing well? Blah, 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 blah. Well, guys, it just does what Enbridge does. So as you can see, Enbridge has been taking a dip in November. ENS will take a dip in November. ENS does whatever Enbridge does, guys. It's as simple as that. So, and not only does it do what it does, but to an amplified degree because of leverage. So if Enbridge goes up, ENS should go up and then some. And if Enbridge goes down, ENS should go down and then some as well. So, and another interesting thing, if you see here, I clicked on for both of them 1 year. So in 1 year, Enbridge went up 20%, a little over 20% here, or just under 21%. And ENS went up almost identical, 20%. Now you might be asking, well, if ENS is leverage, shouldn't this be higher? Shouldn't it be like 25% or 30%? Shouldn't it do better because it's leveraged? Well, no, because of the covered calls, guys. Don't forget that the covered calls reduces your capital appreciation, because that's how you get more income. So it makes complete sense that the ENS is not beating ENB in terms of capital appreciation, but it's really, really, really close. And this for me just proves that Middlefield knows exactly what they're doing in terms of how they write the covered calls. They're doing it beautifully and perfectly. So remember that you might be thinking, well, why don't I just get Enbridge? Well, Enbridge gives like 7 or 8% yield. ENS gives 11% yield. So this is really for income investors, a great way for income investors to invest in Enbridge. That's basically what it's about. So yeah, I just said it here. So key points and reasoning. This for me is the best way to invest in Enbridge if you want income. If you want income, I repeat. Enbridge, as we all know, it's the king of Canadian energy. It's the biggest energy infrastructure company in North America. Its revenues are very safe and predictable, unlike oil and gas producers. These guys do not produce the oil and the natural gas. They process it and transport it. Very different. Enbridge took a little dive in the last month, and honestly, guys, I looked, I couldn't really find a reason why, which is a great opportunity to buy ENS or Enbridge, right? They also announced a dividend raise again for 2022, a 3% raise. It's the 27th consecutive annual dividend increase. So it's absolutely legendary. Enbridge is a dividend aristocrat 2 times over, 3 times over. And yes, ENS is still trading at a premium to NAV, but it typically does. Keep that in mind. And the spread is much lower now at 5%. It's not like it's at a 15% premium or 20% premium. 5%, very acceptable to me. So also, ENS never missed a monthly dividend since inception. Excuse me. They also raised it from $1.20 to $1.56. For me, ENS is a very, very safe split fund because the unit NAV is very high. It's over $23, way past that $15 minimum. People need their electricity, right? So that's always going to be a fact of life, which is why Enbridge is safe. I even have another one, but I have several videos that focus on Enbridge, and there's one that focuses on ENB versus ENS. So make sure to check those out if you haven't seen them already. But Enbridge, definitely one of my favorite companies of all time to invest in Canada for high income, high dividends. ENS just amplifies it. That's all there is to it. Thanks for watching, guys. I really appreciate it. Please show your appreciation by hitting that like button. I think I really deserve it this time. I got through it by, coughing and clearing my throat. I apologize for that. So even though I'm sick, I'm still making good content for you guys. But I'm going to celebrate now by going downstairs to the beach and having a couple of beers. So hit that like button. I would really appreciate it. Also, make sure you're subscribed to my channel. If you like this type of content, I do this video every single month. It's a series. So if you're investing for high income, for high dividends, to achieve financial independence, if you like passive income, this is definitely the channel for you. So make sure you're subscribed. Also, make sure to go on our website, guys, passiveincomeinvesting.ca. That's where you can access a bunch of free tools and resources, as well as purchase my digital product, the Ultimate DIY Investing Package, which is on version 3. So this digital product is really a companion tool or a reference tool to help you build your own custom portfolio. But it also has sample portfolios for you as well. So it will help you build your portfolio, whether you're Canadian or American, whether you're an income investor or a growth investor or a dividend growth investor, etc., etc. Like I said, I'm not against any type of investing, although I focus on income. I've also added multiple different sample portfolios in there for you guys. So make sure to pick it up. It's not very expensive and it comes with lifetime updates. So you only got to purchase it once, because you'll have all the, when the next version comes out, you'll get it for free. So very, very interesting. Also on my website, I also offer a one-on-one consultation service where you could book a one-on-one with me personally via Zoom, where you could ask me a million questions, or if you want more personalized help to really, if you want me to analyze your situation and help you build a portfolio accordingly. I love doing them. I do about 4 to 5 a week, and I'm meeting people from all over the world in all kinds of different circumstances. I love doing it. It's a win-win, because I help them and they help me know what consistent questions and so I could present or make the content on my channel. So I absolutely love doing it. It's right there on my homepage, guys. There's a calendar, there's a description of what the one-on-one entails, so make sure to check it out, and check out the message on top of the calendar. That's where you'll get the status update. So right now I'm completely booked, and make sure you're subscribed to my channel and join our Facebook group, because that's where I make the announcement of when the calendar is open. So speaking of Facebook, make sure you join our passive income investing Facebook group. It's growing by a couple of hundred members every week. Great questions, awesome questions, people helping each other out, showing their portfolio, asking for suggestions. It's really a cool group. And follow us on Instagram if you use that social media, if you want a little bit more personal, if you want to know a little bit more about us and our personal day-to-day lives, make sure to follow us on Instagram. So what do I leave you with? Usually, guys, the same thing. Stay passive and stay healthy. So I see you next time.